Sanjay Agarwal joins us now, Managing Director and CEO with AU Small Finance Bank. Sanjay, good morning. Thank you for joining us. The big smile on your face has come. Is it after the 3-year extension after RBI?
No, I know, Nikunj, you would be asking me this only, but of course, yes, I got relief, and the reasons, but I think it's a public platform, and when regulator trusts you, the board trusts you, the customer trusts you, the entire ecosystem trusts you. It's a very special feeling. So I'm enjoying that space now and look forward with more determination to build one of the finance institutions of this country.
Your look was different after extension. Your look has also changed, is it? New extension, 3-year look, new look, right?
That I don't know, but just that's my way to handle myself. So no, it's good for you guys, right? You don't know, you don't want to see the same face every day, right?
But shareholders want to see the same aggression every time when we interact with you and every time we discuss your quarterly numbers. Correct. Quarter gone by was strong on loan growth, margins, asset quality. But is this as good as it gets purely because of the cost of deposits? Purely because of what's happening to the interest rate cycle? Is the best of the earning uptick behind you?
Oh, no. I don't think so. But because, we are in journey, Nikunj, we are new franchise on the road, just 6 years has gone by. We are still learning this platform. We got to the level of what now, close to 69,000 crore of deposits. We've gone around 60,000 crores of assets. We are able to build our digital platform. So, and there are not much investment being done on many initiatives like credit card or video banking or, the other digital initiatives, right? So we are into that investment mode. And of course, the last year became tough because the overall cost gone up. But I think we are very solid in terms of overall approach, the business model, the sustainability around it, the people, the product, the markets. So I think just give us maybe another 2 to 3 years, and you will see that once we reach one scale, I think same market, same people, same thing will give you better returns, because when the cycle will be over, so our credit card should become profitable next year, right? And, we will start monetizing our QR code business and, we'll start building more a digital franchise than a brick and mortar. So I think overall, I'm very optimistic around our whole future and, and the way we handle ourselves in such 6 years, that gives us more hope,
Sanjay, but just to get into specifics, your loan growth rate has been 20-25% over the last 2 to 3 years. Is that maintainable? And also with respect to net interest margin, should we expect a contraction of 30 to 50 basis points this year, given the cost of funds?
So if you ask me that the first foremost focus area for me is to build deposit, right? And that we are growing, very fairly well. Last year also we grown by 32%, right? So I think this year also, in spite of the higher rate cycle and, the lot much challenge there, but I hope that, we can grow around the range of 28-30% in deposits. And then, our asset franchise is solid. We are doing that business from last, 28 years now. So I don't think that we should have much challenge around asset build up, because we have diversified book, it's well settled, asset quality is one of the best. People are there on the road, and we are building our franchise more robustly in terms of our brand and all those things. So I think I'm too much optimistic around my asset. It's more about rationality. So we just want to grow in the range of 26-28% there also. But of course, if cost goes up, there can be a pressure on NIM because, we lend a market like, 14-15% it's not easy to actually transfer the incremental cost to entirely the customer, right? We need to hit our balance sheet too sometime. So there might be a 30-40 bips NIM pressure this year, but I think the other factor will play in, right? We can have, because the insurance, we are selling insurance very well, so we can have a better earnings from there. We can have an AD1 coming back. It has AD1, we just got the license of AD1, right? So I think their income can be also be there in Q3, Q4. So I think overall, our ROA can be protected. Of course, the form can be very different.
Okay, so the bottom line being that the 26 to 28% growth on asset side is sustainable. There might be NIM pressure to the tune of 30 to 40 basis point, but you're more focused towards building your deposit franchise, and that remains the key focus area for you as well. You talked about getting the AD1 license as well, but then separately there were reports talking about how RBI is watchful of the kind of growth that you have reported when it comes to the asset side as well. Could you talk to us about what are you doing with respect to risk management? How do you expect the asset quality to pan out from here on?
No, to be very honest, we are well diversified in our asset build-up. Like we are running a wheel book from last 28 years. That book will only grow by 20, maybe around 25%, right? SBL is a secure business loan business, right? Which is also from last 15, 16 years. That will also grow by 25%, right? The commercial banking space, which we started as a small finance bank, which is just coming up, right? That may grow in the range of 30, 35%. So I think we have a well-diversified book. 92% book is secured. We deal at around 14, 15% IRR. Historically, our asset quality has not deteriorated at all, even in the bad of the times, So I think if you ask me, the overall asset is there where we get most of our comfort, My challenge is not asset and asset quality, to be very honest. My challenge is to really build a brand where people trust us more and more. We get a low-cost deposit. If you get a low-cost deposit, there will be an automatic sustainability of this platform, right? So if you ask me, as a risk, is more on deposit and the cost than an asset and its quality.
But your cost to income ratio, let's say it's 63%. It has gone higher. When will the cost to income ratio is also a function of scale and size. As you will grow, it will change. How far are you away from that curve where the cost to income ratio starts really, coming down as the base increases?
2 years, Nikhil. Because next year, as I told you that, our credit card will become break even. AD1 will start coming in. There is much rationalization around insurance distribution income. Our wealth will come and start kicking in. Maybe next year you'll see some help from the cost of money also. So I think overall, I believe that it's very nearby. You will see the positive impact on our cost to income coming maybe from next year itself.
This environment where the fight right now is not the fight within the banking system is fight of liabilities. Who gets more market share of liabilities? Would you be forced to increase rates? Would you be forced to give better fixed deposit rates or saving rates? It's like it reminds me of that old Kotak Bank. It is not 2% more, it is 50% jada. Would you be forced to do something on similar lines?
No. I think we are already around that. So we give you saving rate around 7.25. We are giving you 8% deposits. We are a small finance bank. Still long way to go. We are able to build a decent brand, but still people need to believe in us. That is why in my narrative last night, I said that give us more 4 years because, banks are not built in 5-6 years. They need some good runway, which may be around 10 years, right? So I think I would say that we have to price deposit right, but it is not that we need to price high, right? We need to build other hooks, maybe through loans, maybe through digital outlook, through credit cards, through everything, right? And now AD1 coming in, Nikunj, I think it completes our entire product side. We are not lacking now any product, right? Till now we were not able to handle EXIM customers, the payments, the remittances, right? So I think you will see, AU is not playing only on rate. Of course, we need to play around it. But we are building other hooks so that customers start believing that AU offers them complete solution.
Question. It is still known as AU Small Finance Bank. A small finance bank can grow because India is growing, but then for you to become a large formidable player, you need to be a complete universal bank. Do you see that happening in 3-4 years?
Long call, Nikunj. And being a cricketer, I always believe that we are executives like players, right? and we need to go and perform on the platform which is given to us. It's up to the selector, which in my opinion is the board, the shareholder, and of course the regulator to decide that what platform is good for us. So I'm happy running the largest SFB of this country, and much can happen in next 3 to 5 years, but difficult to comment as of now. And by getting ED1, we have completed our whole product solutions. There is nothing left between us and the universal now. Of course, small sometimes plays negatively for us, but I think as we move forward for more in this inning, people will start building up a better opinion on SFB also.
Sanjay, like your new look, and next 3 years, congratulations. Your stock, when that news came up, was up 20%. So obviously everybody's excited with the extension of your tenure.
Thank you so much, Nikund. I hope I'm able to build that trust people are showing on me. It's a wonderful feeling, that people trust me so much and they believe that AU can build one of the most fascinating story for this country.
Well, congratulations.